In this presentation, we're going to go through the bank reconciliation process after having entered the first month of data with the help and use of bank feeds. It's time to rage against the accounting confusion with Sage Business Cloud Accounting. Here we are in our Get Great Guitars company summary page within Sage. We're going to be opening up then our balance sheet first. Let's go to our reports drop down. We're going to be opening up that balance sheet. Once open, then we're going to duplicate the tab by going up to the tab up top. We're going to be hovering over that tab and then right click on it and duplicating that tab. We're going to be checking the date here. And note that we're working, we haven't entered anything after March, but we'll bring this back to March just to emphasize the point here. Let's bring this on back to March. We've entered data for March, so we're going to say the 31st and calculate that information. So now we have the checking account that's at the 190,000 to 728.54. That matches our bank statement over here, and that's because we don't really have a reconciliation difference if we have everything entered into the system because we're getting our information directly from the bank. But I still want to reconcile. I want to point out the purpose of reconciliation. So normally you're going to reconcile to compare your books to the bank's as if you put your books in there separate from the bank, and then we have the reconciling difference to double check everything on the bank, and then the difference should be outstanding deposits and outstanding checks. So that's normally the purpose. It's a huge double check against the accounting system. So the first biggest check against the accounting system having an error is the double entry accounting system. Software such as Sage helps us to do that because it forces us to be in balance. The second big check is typically going to be we enter the information on our side, the bank enters it on their side, and then if we can reconcile the cash accounts, we're not only checking the cash accounts, but every flow that the cash accounts go through. And notice that obviously cash is going to be a part. I'm going to our flows chart. This is in QuickBooks Desktop just to look at it. But just note that no matter what cycle we look at, cash is obviously involved. So it's involved in the payment side of things. It's involved in the customer side of things. So even if we're on a full service accrual system, if we check cash, we have checked a substantial component of the flow of any kind of system, unlike any other account, right? No other account has that kind of pull with every section with every flow. So that means that reconciling cash is going to be huge. So if we could double check that, that would be great. Now, if we're completely relying on the bank, it's not as big of a double check, right? Because at this point, we don't have two sets of books that we're reconciling anymore. We're just depending on the bank, right? So that if the bank made an error or something, it's not like we're reconciling two different things. We're just relying on one set of books. We're relying on the bank to be dependable, taking that information, creating our books from it. And therefore, we will have no reconciling difference, and we don't have that kind of double check. However, we still want to do it because it gives us that check to make sure that we didn't double enter anything into our system, and it gives us a check that we haven't deleted anything, that we missed any kind of transaction. So we still want to do that reconciliation process. Whether you do the full service system, have outstanding items or not, it's going to be a similar process to get into the reconciliation and go through the process. So let's take a look at that now. I'm going to go back over. I'm going to go back to the first tab over here so we can do stuff here. And we're going to go to the banking. Then we're going to use the checking account. That's, of course, is the one that we've been working on here. We've imported all of our items. So now I'm just going to click on the checking account to go into the checking account. We'll see more data. Then I want to go up to this fairly large button. It's a pretty good sized button over here on the right-hand side as buttons go. And then we're going to go to the reconcile. We want to reconcile the account. So then we're going to get into our reconciliation screen. So our typical reconciliation process, what we need is the bank statement. You want to have the bank statement. You don't want to have like a bank feed or something like that, because you don't want to just be looking up dates. You want a standard cutoff. You want to cut off the bank statement. It's great because it'll give you that. Typically, here's the beginning balance. Here's where we were at the beginning of the month. Here's the addition. Here's the subtractions. Here's where we are at the end of the month. And then here's the detail down below that will give you detail about the additions and the subtractions. That's what we would really like. So we want to reconcile to this number. We already are, of course, in our system because, again, we're dependent on the bank, but we want to double check it here. So we want the 190,728.54 is going to be our ending reconciliation. So as of this date, we want on the bank statement 190, I can't remember anymore, 190,728.54. So 190,728.54. 728.54. 190.728.54 and 190.728.5. All right, that's it. And then we're going to pick of course, the checking account. That's what we want to have. Once we have that, we're going to go ahead and apply this. So I'm going to apply that out, and then we're going to see our transactions down below. So I'm going to see the transactions down below. Now, given all of our transactions were directly from the bank feed, notice it kind of just checked them all out for us. They're all cleared already. Why? Because we took them directly from the bank feed. We made the thing from the bank feed. So the system can basically just check this off, and you can go down below and say, yeah, we're in balance. Our bank balance reconciles to the register balance. However, here, note we do have a difference down here. The 105,811 is different, and that's not checked off. So let's consider why that is the case, and then we'll go back and just check all these off like we normally would. One thing I would like to do, notice there's 2 pages right now. I like to see more on one page, so I would hit the drop down here and say I'd like to see everything you got, on one page. So then that'll add all the information down. So notice there's one item that's not checked off here, and that's going to be this item, the 105,811.54, which if we go back over here is the beginning balance. The beginning balance is not included in the reconciliation. Why? Because normally that's the beginning balance. If I go back down below, that should be the starting balance here. It's not the starting balance. Why isn't it? Well, note that when we set up the beginning balance, we could set up like a beginning balance in the system. But oftentimes, we'll enter it the way we entered it here, and then we had to include the beginning balance. So we went back in and added the beginning balance. In other words, the beginning balance didn't come from the bank feeds, so it didn't check it off automatically. We entered it in the system. So normally, as we'll see in the month 2, the beginning balance will reconcile to what we had here because the ending balance will then be the next period's beginning balance. But here it does not because we entered the beginning balance as a transaction. So here, instead of going back and trying to get the system to put it in there at the beginning balance, I'm just going to say, hey, it's another reconciling item. And so we'll just check it off and reconcile it, and that'll bring us to the reconciliation in the first month. And then in the second month, we will have that beginning balance. So this is a common kind of problem, that beginning balance with the first month of operations. So you kind of want to be aware of that no matter what kind of system you're using, bank feeds or no bank feeds. So then I'm going to check that off. If I check that off, then again, it doesn't show as the beginning balance, but it does show us as being reconciled. We're off by that 54 cents. I don't think I have the pennies right up top. So this should be 190, 728, and then 54, right? 54, 54. So I'm going to apply that out again. For some reason, this little thing is over the end, and I can't see it there. So then if I go back down, we should be completely in balance. So we're totally in balance there. So that's kind of a workaround you have to deal with on the first time here. So what I'm going to do is I'm going to uncheck everything except that last beginning balance, and then go through kind of the normal process you would have. Again, if you have the bank feeds and you made it from the bank feeds, the system already knows. That's why they're all checked off. But if you didn't have the bank feeds, then you'd have to go through this process, and it's useful just to see how this works. So I'm going to check the first one off, and that's basically the same as us saying, hey, the beginning balance is there. So it's not in this section. It's a reconcile, but it's just checking off the beginning balance, and that's not going to be part of our difference then. So on our bank statement, I would actually highlight that. I'd say, okay, I found that one. I checked that one off. Now, the typical thing you're going to want to do is go from the bank statement to your books. If it's on the bank statement, not on your books, then you're probably going to have to add it to your books, right? If it's on your books and it's not on the bank statement, then it might be an uncleared item, like a check that's outstanding. That's why you always want to go from the bank statement to the books, because that's going to be where you're not going to have a confusion, right? If it's on the bank statement, it should be on the books, not necessarily vice versa. It will be for our case because we made our books from the bank statement, in essence. But just for common practices, you're always going to want to go here over to the book. So here's the 65,000. I'll just do this real quick and check these off. So here's the 65,000. This is typical bank reconciliation kind of activity. We're going over here. We're looking, all right, here's the 65,000. And then I would go back over and say, found that one, right click on it. I'm going to make it green. I'm going to check it off. Then I'm going to go back over and say 50,000. 50,000 is here. The highlighter works here. Color is nice to use on these kind of things. Sometimes old accountants don't like coloring things sometimes. I don't know why. But it actually really helps to have some color in there to check it off. So I'm going to check it off, 8438. So we're going to say there's the 8438. I'm going to check that one off. Go back over here and I'm going to make it green. Say we found that one. There's the 13192, the 13192. There it is. I'm going to go and check that one off. Then I'm going to go back over here and I'll make that one green because we found it. And then I'm going to go to the 12,000. So I'll go back over here. We want the 12,000. There's the 12,000. And then we'll check that one off. Then we're looking for the 16. So let's do 2 at a time here. 2 at a time. 16 and the 7. So here's going to be the 16 and the 7. Notice the order, it might be in a different order because this is an order by date, especially if you're writing checks. Then when it cleared is going to be a different date than when it's in here possibly. It should be the same if you made it from the bank statement reconciliation, but in any case, we're going to go back over. Here's the 400, and we're going to go back over here. So we found that. Let's do the 598 and the 620 like at the same time. So here's the 598 and then 620. So totally did those at the same time. And then we're at the 15,000. So let's go over to the 15. So here's the 15. And then finally, I'm going to make that. We've got the 80 and the 15. So there's the 80 and the 15. So notice there's no items on our books that aren't on the bank statement in our case because we made our books from the bank statement. However, if we hadn't done so, if we did the full service accounting, there would most likely be checks on our books that are on the bank statement as of that date because they had not yet cleared, and those would be the kind of reconciling items. So once done with the reconciliation, you should have the difference column being 0, and once the difference column is 0, you're good to go. Again, the difference between the first bank reconciliation to later ones is that beginning balance will not be there. I checked it off as part of the transactions. Next time, it will be there, and we won't have to check off the beginning balance as we go through. That will be the only difference, and we'll see that next time. So I'm going to go ahead and finish then, and you want to make sure that that's 0 before you finish. You don't really want to force the reconciliation. And there it is, and you can actually print this if you so choose. I'll go back up top and print it. And so there you got our information on the printed reconciliation report. So that's going to be it for now. Let's get out of here.